They are said to be the pulse of the economy when it comes to their role they play in the financial sector. I'm talking about commercial banks in Ghana. What are the expectations for 2025? Can we say that they are out of the woods with respect to the challenges that hit most of the banks post the domestic direction program? Is the outlook that favorable for them in 2025? What about the expectation for the 2025 budget that the Finance Minister, Dr. Ato Forson, will present to Parliament on March 11, 2025? The expectation, how did they get it right in ensuring that they lend to the right sectors of the economy? This is PM Express Business Edition, and indeed, I'm indeed grateful to have the Managing Director of First Bank Ghana, Yaw Victor Asante, as we look at the banking sector outlook and the 2025 budget. Mr. Asante, thank you so much. And this time I got it right. First Bank Ghana.
Yes, you did.
And I hope you're doing great, sir. It's been quite a long time.
Absolutely.
And we look forward to a very interesting time with you and talking about the developments in the industry, expectations, and the outlook as well.
Always good to see you, George. It's been good. I think 2024 was overall okay. We'll take what we got. We all know what the year represented. Quite an unusual year, both on the world stage and also in Ghana. 2025, of course, presents a very different kind of scenario, change in government in Ghana, and of course, what is now becoming more and more the Trump factor this year and the years to come. So, fingers crossed on what the year brings. Last year was good. We hope this year is even better.
I know rulings around numbers and all the rest and regulatory requirements and not getting into any fine details. One would ask that, how are the numbers looking like for First Bank Ghana?
Well, speaking for myself, I think so far as we are having a growth that is higher than maybe the country's growth, at least you are at the minimum, you are firing in the right direction. My balance sheet is relatively small, so you expect me to grow faster than the bigger banks. But I think from the numbers that we see already, it shows that we'll be in the top 5 in terms of percentage growth, which is a good one for any bank. So we are happy with what we did. What we need to do is to keep doing what we did so that we can increase our market share, make sure we continue the same direction, and then execute our strategy. We've just had a strategy refresh on some of the things we think we need to do. So it's now execution, and I think that's what will take our attention going forward.
You talked about execution. How is this execution being done to make the bank the preferred bank for a lot of Ghanaians? I know that you had a strategy. I don't know how far you've got on that strategy in terms of position the bank as the preferred
as you would
bank.
expect, every single organization, bank or not, will have a strategy to work with. It's always you must have a guiding pole. For my bank, as you may know, First Bank is the biggest bank by asset and by coverage in Nigeria, and for that matter in West Africa. Oldest also, 130 years now. Much known for its retail play in the parent geography. We cover quite a number of countries also in the sub-region, and what we have tried to do is to bring some of the expertise and some of the products that have been successful in Nigeria in particular to the rest of the countries. In Ghana, for example, we have done quite okay in the SME, commercial, corporate space. What we need to do, for example, is to make sure we double down on our retail and so on. And those things need a set different kind of infrastructure. So we focus on building them. Some technology, some digital platforms, some brick and mortar. So we've worked hard to try and make sure those things are in place. They are necessary levers to trying to grow into the mass market, into the retail market, and so on. So we've been working on that. Hopefully, we can now start leveraging on those. So there's no rocket science to this strategy that we need to do. I'm sure everybody knows, looking at us, what we need to do, just like I look at other banks and I know what they need to do or what they are missing. So it's just been that, and hopefully we'll get that done.
Is it fair for some to say that we, and I'm choosing my an uneducated assessment about the debt exchange program and the impact on the banks, because I look at the numbers, and again, just for the layman perspective, I see a lot of you banks posting some strong numbers, and even the question about whether you guys have turned the corner, if I can use that expression. Some are saying, did we over-exaggerate with the impact of the debt exchange program? For those who would want to look at just your numbers, the bottom lines, including First Bank Ghana and the other banks, the strong profit that you posted for the previous years.
For speaking for myself, we didn't have too much of that because we stuck to our risk portfolio, our risk guidelines, and so on. So when you do that, when there's a problem in any particular area, you still are capped. So even though it had become easier to, for example, buy government bonds and so on, we didn't go for that temptation at all. So if you notice, in the last 2 or 3 years when it started, we had the list of, we and a few of other banks. Quite a number of banks did have some significant exposure. And the first year of the full implementation was tough. But what they did was to now just make sure they went beyond just their provisions and work hard at trying to see what they could recover. So they went into that mode. I think after last year, it was some of them were able to write back some of the things they initially withheld. I mean, it depends on how the performance goes. So that happened, and then you could see that banks were now giving very strong performances. But quite a bit of the performance was also because people were writing back what they had initially withheld, because we didn't know what the immediate future held. So it's only prudent that happened. So there's a bit of that we, having done the worst case scenarios, you could now allow yourself a little bit of it back into your balance sheet, which happened. But it's taken over a couple of years. Some also went over a period of time. And the same thing will happen again now that we are doing our 2024 numbers, getting the check and all of that. I'm sure you will see some banks again writing back some more in it. So that would make it seem that banks are doing better than they actually are. If you strip it of extraordinary items and you go to the core performance of the year, then you can start talking. So it could have been worse, and we are grateful that it wasn't as bad as that. But what you see is also a measure of the fact that people are putting back something they didn't recognize. And as a bank, you have to do that.
I'm looking at that even in the scope of the broader environment as well, not even just those who are directly exposed, because you look at the environment and everything that happens impacts everyone. But I look at the environment and I want to look at banks, including your bank, and I realize that really I don't feel the shocks in the environment in your numbers. And I always say that, again, an uneducated and not well-informed question, if I could say that if I want to look at your bottom line, your profits, even though some will say that, okay, look at the NPLs, look at how much they are mobilizing, how much they are lending. But if somebody just wants to look at your numbers, I ask myself that despite all the challenges that we are facing in the economy, I don't see that impacting on your numbers.
No, on the contrary, actually, if you look at it, the NPLs and so on the banking industry has gone up. It was inevitable. If you have the kind of shocks we went through, usually the middle SME commercial area suffer a lot, and they will come out of it, but it will take time. So quite a number of banks are. The industry average NPL is now around about 25 or so. That is very high. So it tells you that we are not out of it at all, and banks must work with their clients and their corporates to ensure that this is resolved. Again, if you look at underlying growth, like I said, you will see that we may have slowed down. I mean, if you look at the CAGR of growth of banks over the last 10 years, the trajectory, you will see that in the last 2-3 years, it was slower. Remember that a lot of banks are foreign-owned. They bring capital in FX, in dollars. So for me to say I've grown, I must grow much faster and bigger than the depreciation and so on and so forth. So if I post a 25% return on my growth factors, I really haven't grown. It means I've flattened, because I need that at least to have the equivalent of what I had at the beginning of the year. And whilst the the standalone numbers will look impressive. If you strip all these things and you realize that there's no growth, and in fact there has been some reverse growth for some banks.
So I get from you, the George, just be careful. Now let me tell you the educated issue on the ground in terms of the numbers. I remember I once engaged an MD of a multinational, and he told me about their challenge, even though they would do so well in CD terms, when they strip it and move it to the FX or the dollar, in the group, they are thrown out and say they didn't do a good job. Is that also another major challenge for you, since you also report as well?
The good news for some of us is that those of us who have regional offices or head office in Africa, the position is also strong. Nigeria had a very strong one last year, for example. I think South Africa too was into. So to that extent, the South African banks, Nigerian banks didn't have too much of that to deal with this past year, because the depreciation in those countries was also quite high. So we move in the same kind of tandem. But once we all go into dollar, then yes, we are back. The international banks that report in pounds and dollars must have a stronger, a more difficult story to tell, at least in terms of. But the bottom line is that not every year is the same. Sometimes it's bad, sometimes it's good. As a bank, you can't be short term in your outlook at all. Once you decide to be a bank, you must be looking mid to long term. So you just take it on your chin and move on.
Mr. Asante, I mean, for you, how do we get around and you spoke about the city and the impact on banks like yours and even your ability to lend, and I know that you want to see a 25% growth in your bottom line, and that also impact the same when you even convert it to FX, dollars and pounds and whatever foreign currency that you look at it. For you, how do we manage the situation that even for banks like yours, even though you have all the insurance and the shock absorbers, to minimize the perennial challenges with the Ghana city? Because some will say that even the dollar in US have its own blips, but when it's too high, it's a challenge. How do we manage the blips from a perspective of a bank and somebody who has been in this industry for quite a long time?
I think, George, the last time we spoke, we went this direction, and I said to you that so far as we spend more dollars than we make, we have a problem. So the simple answer is, at what point do you have a balance of payment which says we make more dollars than we spend? So it is basically that primary problem. Exports. How much are we exporting? How much are we importing? So we must curb our reliance on a lot of things external. Try and see what we can eliminate, and be deliberate about promoting exports where our strengths are. And as we found out, also not even promoted, but make sure we are capturing all the exports that are going into the economy. I mean, we all saw what happened with Galamsey and all the numbers, the incredible number in terms of what we thought was going out of Ghana in terms of gold and all of that. And that was not even going through the economy of the country. So we're losing all of that. So we actually sit in a good place where we can either export enough or import less and make sure that there's a number we can live with. If 5%, 10% depreciation
for the whole year
of the currency.
Or for the quarter.
Yeah, we've been that for the year. We've been there actually.
I'm just seeing about the feasibility.
Yeah,
sorry.
A decade ago or so, we planned with around 10%, 5% depreciation. And once occasionally you have that 5-year occasional thing that the 25 comes through, but you usually have 5-10 that you can plan with and so on. Industries, and it's not just banks, all industries, if you go particularly the multinationals that depend on a lot of input from like the Unilevers and so on, who must import a lot. You always use 5, 10, 15% maybe in a bad year. But when you start doing 20, 30, you just can't pass everything on to the consumer. So you start losing a lot in terms of FX losses and so on. Sometimes also because of availability, there's a delay which makes it worse and all of that. So we must focus on making sure our balance of payment is right. Once we get that, which means that we have more dollars that we can spend, then we are okay. I spent a year in Botswana when I was in Standard Chartered Bank, and nobody worried about taking money out because there's so much dollar. Nobody even asks you about documentation on anything because of their export was stronger than their imports, and they were a big exporting. Of course, they had diamonds and so on and so forth. So it is that simple. That's the only way we can fix that problem.
Let's look at the monetary actions as well. I mean, we've seen some fairly stability as well. How would you rate the monetary intervention? We've seen the Bank of Ghana a lot on the market to support in terms of demand and all the rest. You think that we should be heavy on the market? We've seen some stronger build-up of dollars, reserves and all the rest. Is that approach sustainable, at least for the short term, to try and see the cedi being fairly stable as you're seeing right now?
So bottom line is we must come to a point where we don't have to be even deliberate about interventions. It should be an ongoing, natural, regular thing. But we don't. If you see anytime you hear central bank going after banks or going after the markets, issuing threats and saying we've done this, it means something is going wrong. You see, it must be such that it's not even seen. It is only a natural process, but it is just quiet and it's taking place naturally. So, of course, there are some times that you must, and I know recently, for example, there have been some focus on remittance companies, which basically says that we think there's a problem here. And so, yeah, so if there's an issue, we fix it and then we go on with it. But I think we should have it so natural that you are not even in a hurry to go and buy dollars. People buy dollars in advance. You know, that's also a problem. So I want my cedis to just be idle and so that I can make some interest on my cedis and buy dollars to time to when I need to pay. But as soon as you have a situation where people start buying, and the first currency, the first thing people think about when they want to protect their currency is to buy dollars. I'm traveling in December, I'm buying dollars in January. So it just means that there's trust. And when it comes to these things, trust is so important. So to the extent that we think when I need the dollars, it will be there in the right quantity and at the right price. Nobody will be in a hurry to buy. And that's that.
You mentioned remittances as well. And recently the Bank of Ghana came out with a press release that they're doing an audit of remittance for the last quarter of 2024. And they have an argument about what do you make of this plan by Bank of Ghana to try and audit remittances for the last quarter of the year, establish the true situation on the ground, and even see whether, in terms of regulation, they are doing the right thing?
Yeah, he's a regulator. Bank of Ghana is a regulator, and occasionally they ought to do such. And I think I welcome it. Just let's check if remittances are coming in the way we are, if it's coming through the banking system, if everybody's playing the part they ought to play. So I think it's the right thing to do because a lot of numbers are bandied around. So much here, so much there, so much there. And I think what Bank of Ghana is saying, wait a minute, I hear these things, that's not what I see through the banking system. Let's go and check and see what's going on. So I think it's fine. And I think so far all the remittance companies have also welcomed it. So let's see what happens in the next quarter. And then if there are any lessons to be learned, we just learn them and make sure going forward we get it done. But we must get the effects that come in to come in. We must fix that.
In terms of the outlook, we've seen some fair stability on the market. I mean, you are a player in this industry. What is accounting for that? Some are saying that if the banks are not demanding more dollars,
exactly.
I see auctions and the banks are not even taking more the dollars available. I don't know. Help me out with some educated reasoning about what is happening on the market.
So if there's no demand, then there's no problem. I think sometimes, like I said, market making is also psychological. So far as there's a lot of supply, people just chill, for want of a better word. So the interventions were high. So a lot of supply. So now people relax and said, okay, wait a minute, I can. Because you don't also even want to use your facilities to go and front load the dollar requirements and all of that. So I think that happened, and I've seen that some success was achieved around some of the import areas. I believe there was some prevention that really helped. So we should continue to make it very, very difficult for non-essentials to come in and also help a lot of people who are exporting. There are some traditional, non-traditional areas that are becoming very big, the cashew export and so on and so forth. And we must fix cocoa. Cocoa is now fetching quite a bit of amount of money. What we are seeing, what we are hearing is not too good. I met a new management of Cocoa Board, Randy and team, and they were talking about quite a number of things they need to do. So let's fix that aspect too, because once we fix it properly, that should be helpful. So I think, again, go back to it's a demand and supply issue. So if the demand is gone down, then you expect that the rate will be stable.
The Council of the Ghana Association of Banks met the governor recently. One of the issues that came up was the cash reserve requirement. And since you talked about holding your monies in dollars and others, the governor gave an assurance that they are committed to reviewing this monetary action. What do you make of, I mean, for banks like
Well, it's top of our ask. And welcome to the seat, Dr. Siama. We wish you well, and we hope we'll have a successful tenure with you. It's one of the biggest asks of banks now. I mean, the CRR is huge. We went from 10 to 15 to 25, and that is huge. And that's also a cost of doing business. So it means that we can only go backwards and try and price differently. So once we get some easing of that one, hopefully we can pass it on also, because what it basically says is that when I take deposits, I can't do anything with 25% of it. Meanwhile, I'm paying very high on to depositors who are now used to quite some significant numbers. So all I can do is to pass on to borrowers and so on. So average cost of lending went up significantly and so on. And when it goes up, it's a chicken and egg story. Once lending rates go up, the default goes down, high. And then now banks go away from lending, and then banks are accused of not lending. But we want to lend, because no matter what it is, when we lend, we make more than overnight or interbank, or the best place to make the most money is when you lend into the. But when you are lending and you are going to lose 25% of it through MPLs and so on, then you are cautious. So you have a vicious cycle of very expensive cash, expensive lending, high MPLs, and then banks now pull back from lending and all of that. So we must manage the whole cycle, banking and lending cycle, very well. So everybody now comes into a very calm area.
Mr. Asante, is there an assurance I have from you that if today Bank of Ghana comes out to announce that we are getting back to the old requirement for the cash reserve ratio, we're going to see an impact on your lending businesses?
Absolutely.
Is that an assurance?
Yes, it's an assurance. It doesn't even need me to assure you. To be able to do that, I must to be able to do business, I must do that. Because remember, the market will react to it, and all banks will react to it, and there will be a race for cutting rates. And we always focus on those who are not getting funds. We don't focus on those who get all the funds they need. There are some corporates, if you ask them, all the banks are giving them offers that they don't use. So all they do is to come to you and tell you that, listen, you want me to use your facility, because their risk is good. So banks give them. So you want to give me your facility, why don't you do this rate, because this bank has done that and so on. So if I want to keep the good risk, I'll be compelled to bring down my rates. So yes, it's a promise, but it's also a natural throughput that will happen as soon as we start going down on the numbers.
This is PM Express Business Edition, engaging the MD of First Bank Ghana, Victor Asante, as we look at development in the banking sector outlook, and also as we get ready as part of our preparations and even discussions towards the 2025 budget. What are the expectations of those who play a critical role in the economy when it comes to the financial sector? This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition, as we look at the outlook for the banking sector and also the expectation of the 2025 budget. What do the banks expect? What do the banks want to be done for them so they can improve lending to the small businesses out there, and also deal with the challenge of even access and even the challenge about cost of credit in Ghana today? I'm engaging the Managing Director of First Bank Ghana, Victor Asante. He is my guest on PM Express Business Edition. Back to you, the bit about NPLs and what is the problem? I thought that we're making some great progress. Has it got to do with the shocks of the COVID loans, the energy sector lending, or what is the problem from your perspective? Speaking to you as an industry person, what is causing this problem? Are the banks not doing their homework well? Knowing you personally in terms of the prudence, escrow, what you guys do, what is happening?
Well, remember we've coming out from an area where we had some very heightened risk in the economy. And once you have heightened risk in the economy, it seeps down into businesses. So supply issues, receivables delay, it becomes expensive to run business, the risk is higher. So everything comes together, and then some businesses are now go through a period of struggle. And then when that happens, you just have to take a break. Like I said, for example, people couldn't even pass on price as quickly as it was building up for them. Sometimes the replacement pricing was even not possible. You buy something, you sell it, by the time you go back to try and buy the FX, you can't do it. So all sorts of things. So these things always go into the bottom line, and then maybe their facilities are delayed, so non-performing assets go up. But what you have to do is to work through it. Of course, some banks are better. Some banks, I've seen banks that are 50% NPLs, and so that's quite high. Perhaps also because they went into some industries. Perhaps maybe it's just a temporary. Once in a while, we have occasional issues like that they have to deal with. But overall average of 25, I think banks are working towards making it lower, and I expect that to happen. So with the new growth, seemingly new growth, I mean the dynamics and the optimism that we now have and all of that, hopefully that will all go into the bottom line, and then we will see how it goes. But banks have no option but to work with anybody in distress to hope that they can come out. Of course, we'll not succeed 100%, but we'll be happy if we get anything north of 9.
How would a little bit of prudence on the part of the banks, a little bit of scrutiny, a little bit of not giving covenants in your bank such a high target as a credit officer, lead to again bringing these NPLs down? Because there are some who think that maybe the credit officers are under indeed a lot of pressure with the targets you're giving to them. If a lot of scrutiny is done on that Adjoa Mansa who's coming for loan, maybe the people, the good businesses out there with good projects will get the money.
But I thought that we have been accused of not lending enough. Yes. In fact, the CRR position was a measure to try and force banks to lend more, which basically said that central bank said, I'm not affecting your risk policy. I'm just saying, CRR, if you have money you haven't lent, I'll take this from you. But de facto, what it meant was that you were forced to try and give the money out to avoid having to give it for free to the central bank. So if you are being accused of not lending enough, then we can't be accused of having too much targets that we can't lend. But having said that also, it's the process of risk assessment is not that of an RM. So the fact that you have a target doesn't mean you're allowed to. So if you have a proper process of risk profiling, risk assessment, and so on, it shouldn't be a problem that an RM can just drive risk because they have a target. More importantly, and probably that's the most important aspect of even lending. Lending is also about what you do after the money is gone. And that is always where the problem is. Are you checking to make sure the person who took the money is doing what they said they would do with it? Are they putting it in the business you gave it to them to do? Are they not being tempted to buy the latest cars in town to create a little hole there? Are they extending their own credits more than they should? Are they collecting money as quickly as they should? Are they themselves making sure that their 14-day loans have not become 30-day loans to other people? So you need to say to them, and if you don't do that, because sometimes people have to be saved from their own selves. As soon as the money hits their account, the conversations become different, because there's always an opportunity, a temptation. Somebody comes to you, as soon as the money comes and you know this is your well thought through project, and then somebody comes and said, you know what, have you heard a new thing? If you take this money into some Galaxy sites, you turn it around in 90 days and you're not lucky, something happens and then all the money, because you don't know the company, you don't know the business, and then you go and burn yourself. So we must monitor, and we must be in their faces, even though they don't like it. We must monitor, go and make sure stocks are there. You follow the money as an RM. So it is very important that you do your risk assessments well, but it's crucially also important that you do your post-disbursement work extremely well.
There's an element about the cost of the credit as well. Is it always fair to tell us that, or the banks, you tell us that, you know, it's an environment thing. If inflation is high, T-bill rates are high, and all the rest, well, there's little we can do. If all these external numbers are high, it will be high. When or how are we going to see that very soon in terms of the bit about the cost of credit as well?
Yeah, the cost of credit, again, is a function of the whole macro environment and so on. So, for example, I spoke about regulation. I spoke about the regulator saying, for every 100 cedis you pick, bring me 25, unless you are lending about 40 or 50% of it. Of course, there are other things. You have to risk model the whole thing. It's capital that you are using. There's a minimum you must return to your shareholder to make it worth it. Because remember, as a shareholder, if I have 100 million cedis, I don't need to do a bank. I just need to buy a government bond or a T-bill, and I'll get 25% return with no risk. So I can't go through all of these, have all these branches, have all this control, compliance, RMs, operational risk, all those things, finish it up, and then end up with $1 million. So there's all that we need to do. So cost of doing business, cost of funds, it's all a total of all the little aspects of it, including the source of funds. Everybody comes to the bank, they want a very high return for their funds, and so on and so forth. So all of that comes through, and we just try to create a good return for business, a compensation for our effort, which should be fair, and I think that's all that banks try to do. So I think when the macros start doing, and I believe in the last couple of weeks, even the rates have started falling very sharply. T-bills have come down.
What has happened? I mean, I don't know about your exposure in T-bills as well.
Well,
you're not buying some, I suppose.
If government doesn't have an appetite for T-bills, we won't give it to him. So it's up to it's a demand and supply.
Where is this money guy? You then turn it to the open market for lending, because the argument is that government comes in through the T-bills and they are competing with lending to businesses. What do you make of this development on the market in terms of the rates coming down for you as a bank?
Well, it's good. Actually, banks like rates to come down because it means people will pay their loans. Banks will, because I work with the margin. Listen, if the rate is 30% and I have to give somebody 24% to be able to give you 30, it means I have a 6% margin, 600 basis points margin, right? If the rate is 20%, and I have to give somebody 10% to get them, it means I have a 10% or 1,000 bips margin. So it is the margin that is my focus, not the quantum. So I'm happy for a smaller interest rate, because at a smaller interest rate, consumers are able to pay. Middlemen, businesses, SMEs are able to pass on the cost of fund more easily, and so on. So banks actually like rates to come down, because if you don't know, if the higher the rate, the higher the default rate. So I don't have a problem at all that the rate, in fact, I want it to come down a little bit more. The only thing that happens is that when it comes down very quickly, you may have gone and locked up in some medium-term fixed deposits and so on, and giving people a higher rate that you can now lend, whilst people are on ODs, so that's overnight. So in overnight, they get the interest benefit immediately, whilst you can't get it. But that's the business of a bank. So you must understand these dynamics and make sure when you are modeling, when you are promising trade, you must have the right portfolio of mix of borrowing that you are using to lend. So you don't go and over concentrate on very expensive ones. But when there's a problem, you can unwind and make sure you catch up. So these are the times that banks lose money, but nobody comes to our aid. But it's fine, we understand.
Government is not taking this money. Banks like yours, First Bank Ghana, turning this money onto the open market for good business projects, bankable business projects, prospective business projects? Is that happening, or you are finding other investment instruments that you plug in these monies because it's safe for you?
We are a bank.
Even NPLs are high, actually.
Banks want to lend. I keep saying banks want to lend because when you lend, it generates a whole lot. There are other. Listen, if I give you a car loan, you give me your salaried account. Yeah. So beyond the car loan, I also generate all manner of things, including your daily expenditure. You use your card, you travel, I send you FX. So there are other related spill of revenue streams that I get because you have an active account. When I go and buy T-bill, it is static. That's it. That's the end. There's no other activity. We want to generate. When I've built, the branches must be paid for. And all the AC that is on the whole day, all the 15 people who are in the branch who are being paid for means that we need people to come in and bank and generate activity, generate income, generate all those things we need to pay for it. So we are happy when there's active banking and active lending. So we want lending to happen.
Government is planning to, all other things being equal, to do the comeback onto the bond market. Again, banks, I know you are very, but a good thing in terms of the 2-year lending, second quarter of this year, try to see how they can raise more revenue locally. Obviously, the banks would be a target as well. As a player, what are you?
It's not a here, no. There's a matter of what they use it for, how they manage it, and all of that. If government comes and takes money and invests it in self-funding, self-financing projects, that return, it's good. We have a lot of needs. There's so many things they need to do. They are looking at and so on. The government must be the enabler, and therefore I completely am okay if government comes to the market again. They only borrow because they have a reason, a need for it, and so far as that is what it is, it's fine. And we must get to the point where things are done because they are required, and that's fine. And not we borrow to pay salaries. We borrow to go and service loans and all of that. That only means we are digging a bigger hole and kicking down the ball for us to deal with in the future time.
In terms of outlook for the banking sector, what are your expectations for this year? If I look at what has happened going forward this year, let's first start with your bank as well. Let's look at the industry as well. What are your expectations for this year?
Well, our promise is you first. We'll still continue to give if you've seen our trajectory, we are focused on making sure we give the very best. We've worked on a lot of platforms, digital platforms. We've refreshed our brand. We've opened up a few branches around with more to come. Expect a few more. I think we have one good one coming in Tamale, for example, and I'm very excited for that. And like I said previously, we also continue our work on the retail area because it's one area we need to go up on.
Industry, the expectation of the banking sector.
I think
banks are for growth.
Banks are optimistic. Banks are optimistic. There are a couple of areas that need to be fixed. The cocoa industry, the commodities industry needs a fix. Once that is cleaned up, I think that should be fine. There are a lot of opportunities that are emerging. Of course, there are some risks that are also emerging, but there are a lot of opportunities that are emerging. We think banks can help a lot of export-oriented companies to expand their businesses. We think we can work with governments on a few areas where even some lending to government to fix some of the infrastructure that we need. Banks are very optimistic. At least the outlook that we get from the international organizations, the IMF and World Bank, suggests that we'll grow slightly better than we did in the last few years. And also, thankfully, we have the election behind us. Typically, in the year of election, investments are held back, uncertainty, and so on. So now that we've settled, we expect everybody to just focus on their and before looking and all of that. So that also generates people who spend, and so that's also generates. Of course, there's always the first few months of what we have, but that also generates a lot of activity, and it's when there's economic activity that banks thrive. So I expect banks to go forward. Again, the DDEP is done, sorted, signed off. individual bond
No new
holders
EDPA
have done.
again.
Yeah, fingers crossed. We've also signed bilaterals with our creditors, and they've kind of given us some respite. There's renewed hope. You know, anytime there's a change in government and so on, it brings with it a different kind of vibe. People are optimistic. So hopefully we can all capitalize on that and see how we go. So I expect 2025 to be a good year for banks, to be a good year for all organizations for that matter.
Dr. Johnson Pandit Asiamah has taken over as governor of the Bank of Ghana. I knew that recently the governing council of the Ghana Association of Banks paid a welcome visit as well. For you as a player as well, for the banks, what are your expectations of Dr. Johnson Asiamah as he is taken over as acting governor of the Bank of Ghana?
Well, like I said, welcome to him, congrats to him. It's a huge responsibility, and I believe he would immediately get to work. I expect him to continue. I think we've positioned a few things when we met him around. One of the biggest ones is the CRR. I think banks are a bit worried about that, and hopefully he will look at that. There's also the issue around how we manage trade, advance payments. It was a huge issue last year. Hopefully that will also help have a conversation around. I think they've changed some of the rules around it. We need to make sure we collaborate completely, central bank, GRA, ICAMS, and the banks, to make sure that we have a very strong regime around the trade area, so that we make sure we bring in the FX and all of that we require. It was quite I think in the last, there was a lot of, if you like, regulatory interventions, and probably hopefully to start easing. I think there's still quite a bit of uncertainties around a few things in the banking industry. I suspect Dr. Asiamah will look at those things and see how he can quickly make sure all of these are done. I think there's a conversation around NOPs. Let me not get technical too much on that, but banks have also spoken to him around some of these things that we need to be done. I think on the whole, I expect that we'll have a very good working relationship with him. He's actually returning to Central Bank. He was the deputy governor, done operations, been in research. He's also an economist and therefore understands all these macros. So I expect that to happen. The immediate past governor, Addison, did what I think was a good job of his tenure. It wasn't easy. Of course, there are a few things we think we could have done better. He and his assistants did very well in terms of some of the things they had to do. There are always decisions that you think could be done differently. And that debate is almost a faculty debate. It's an academic debate. So could it have been done this way? Could it have been done that way? They've done their bit. Dr. Asiamah is here. We'll work with him to ensure that he also succeeds.
Mr. Santi, do I get from when I engage some banks as well, they want a little bit of a free room when it comes to regulation, not the kind of the SSS headmaster thing. If you push that call to Johnson Aston, give us some space, we promise you we'll do the right thing. Do I also get the commitment from you and your members and your that
we always
the
do the right thing?
regulation is this, and we always
do the right thing. Yeah, there's too much regulation. Well, as somebody said famously recently, if you see headmaster, it means they are students. So perhaps somebody was a headmaster because some banks were behaving like students. I don't know. So I think it's almost a matter of perception and perspective. Yes, we don't want too much interventions. We don't want too much of, if you like, the regulator coming in doing that. But I guess the regulator also says that I don't do that when I don't have to do. I mean, there are 4, 5, 6 banks that are still supported by GATT, which means that government had to come in and intervene and put something. So you don't expect government to be putting money in banks, helping them with capital or with liquidity, and not come after them in one form or the other. So, but yeah, banks are a special industry, and therefore we must always behave like that. Banks are not like any regular company, so we understand that there must be a regulator intervention. We must understand that there's always scrutiny. We are the most audited firms on a daily basis. I keep telling people that my group is here, Central Bank is here, Central Bank of Nigeria is here, external auditors are here, internal auditors are here. But it's a good reason, it's for a good reason, and we must embrace it. At the same time, once we have earned trust, I'm sure we'll be left alone to do the business of banking very profitably.
Mr. Asante, when I come back, I want you to address this concern for me. A friend of mine is an SME. What do they have to do to get it right, to get access funds from you in terms of getting their books right and all the rest, and also in terms of the expectations of the budgeters for banks like yours? This is PM Express Business Edition, engaging the Managing Director of First Bank Ghana, Mr. Victor Yaw Asante, on developments in the banking industry. When we come back, let's talk about the budget. Let's talk about getting that business proposal of yours right as an SME to get access from funding from this bank. This is PM Express Business Edition. Welcome back to PM Express Business Edition as we talk about banks, outlook, the economy, and businesses, engaging the Managing Director of First Bank Ghana, Mr. Victor Yaw Asante. What do I have to do as an SME in terms of my proposals, getting it right to get funding from your bank?
I think it's not different from anybody. Basically, banks look out for the reason why you want to borrow. And so far as you demonstrate that you need money, the cash flow supports what you need and so on, you should get the money. So if you're an SME, your SME focused on a particular area of commerce. And once you show me that this is what I do and this is what I need, this is my gap in funding, and therefore give it to me so that I'll turn it around at this point, and this is my margin, and I make money, I pay you back, and everybody's happy. I should give you money. So it's just documentation. Yes,
they're struggling to get convinced banks like yours.
So two things happen.
Everything being okay, but still
two things happen.
They can't get the funds.
You have to invest in documentation. Sometimes SMEs don't want to keep a proper track of records. Are important. Accounting, bookkeeping, just simple bookkeeping, and banks are happy. A lot of banks have come up with interventions around how this is done, because look, trust is good, but control is better. So you must make sure you have a control around your business. So once you are keeping a clear path, let the bank know what you are going to do, what you want to do, intend to do. Go on a journey with your RM. Let your RM understand. Your RMs these days help. They are very simple, easy things to use. And once you track your business and know, let it show in your turnover, in your financials, and so on. Then the conversation becomes easy. And then allow the banks also to now structure something around it for you. But the thing is that vision holders are very difficult to structure in a different way. Once they have a vision, it sometimes becomes difficult for them. But the most important thing is earn trust by making sure when you take money at the first instance, you do what you say you are going to do. Because banks are suckers for people who have repaid. We also want to go to people who we can trust. So once we can get a trust and you start small interventions, very little interventions, you pay back, you go to a next level, you pay back, you don't get overexcited, you keep to the plan, then you are good. There are a lot of people, like I said, who command much more than they require. If you go to a client that is trustworthy, that is known to always satisfy their banking needs and so on, there's a rush for the door by bankers.
Is it right that some are saying that maybe the banks would want the ripe fruits and not the seedlings? So the SME, in terms of your lines for SMEs, I mean, what is the level of exposure? The argument is that every bank rather wants the grown business, and that's why they are struggling to get funded.
Banks intermediate. Imagine that somebody comes to the branch to take their money, and I tell them that I give money to an SME who couldn't pay, so I can't give them the money. It can't happen. There's no day that anybody comes to a bank to withdraw their money that the bank says no. 100% of the time, it must be yes, right? So we are keeping it in trust. Yes, we are a business. but we must make sure the money we are giving to, we take it from A at the branch, we give it to B on the side to go and work for it. B must bring money so we can always give it to A and then maybe pay ourselves. Yes, it's an enterprise. So what I'm saying is that we cannot fail on the duty of ensuring that money goes to somebody and it must come back. That is fundamental to banking. So to the extent that you always bring the money back. So we want to keep money because that's why we make margins. So if we have the opportunity to lend, we will lend. But remember, we always look out for the deposit maker. We must bring their money back. And every bank is very careful because they have a primary obligation to the person who deposited the money.
2025 budget, all other things being equal, the finance minister were presented to Parliament on March 11. What are the expectations of a bank like yours? Because some are saying that you are the pulse of the economy, and depending on how the economy performs, it impacts you and your ability to aid in financial intermediation.
Oh, I don't envy my friend Atufosin. I wish him well. There are quite big decisions he has to make, but I think in all things we keep it simple. I mean, as they say, when you have an elephant or you have a cow, you eat it bite by bite. You can't swallow it. So I think you should take it easy. First things first. I don't expect too many things at the same time. We know what the issues are. I understand that they want to scrap e-levy. For example, I think it's okay. It generates primary work. I think if they can maybe just reduce it to a certain minimum or maybe scrap it, that's fine. I don't believe that betting tax should be scrapped. I think...
Why? The ideological, business-wise, banking-wise, social-wise?
You know, you're supposed to pay some tax on interest when you earn interest. Yeah. So you're betting, you should just, I think a betting tax, yes, there's a little bit of everything in there. I don't think it's one of the most fundamental problems, if you ask me. And this, I'm speaking for myself, not for my bank. Yeah. I think there are major decisions to be made around the issue of free SHS. I think also they have to arrive. I know there's a forum on education going on. I think they have to arrive.
This is another national discussion on the economy, 3rd and 4th of March. Yeah.
I think they have to arrive at a point where those who can afford it a little bit more should pay a little bit more. I don't know what the model they would do. I think free SHS is a good thing. We should manage it differently and try and see how we can get people to pay a little bit more. And I think people who work in my bank should pay for your fees because I think so they can free the people in the rural or the poor areas to try and also get a bit more of that, because we can't, I don't think we should move, and again that's a bit ideology, I don't think we should move away from the question of trying to get as many educated as possible. I was reading some statistics which suggest that in spite of all the free education and so on, actually we are, in terms of a percentage wise, educated are shrinking as a percentage of our population, and that was sobering. We need to get people into the classroom. And we all know the effects of educated people on an economy. So we have to do the things that we have to do today to ensure that the future is a better one for Ghana. So I expect a few conversations and a few decisions around these areas. Government can't afford to give too many taxes away. At least for the first year, they must make sure their feet are on. I know the promises were made, but I think we should try and see how we can keep some of them, or at least reduce the pace at which we take them off. So those are the areas that government must do.
In some economic theories, there's this argument about government needs to spend to stimulate growth, and even the impact on financial intermediation as well. We are looking at the IMF program. Recently, the president told the finance minister that cut as much as you can. Some are even now looking at an austere budget as well. What do you make of this
you need to spend,
directive, the aggressive cuts?
One of the first things I learned is that you must fund before you spend. Sometimes you have to double fund before you spend. That is to say that when you have to spend, but you must find the money first. You can't borrow and spend. That's not spending because you have interest to pay. I think government must spend and stimulate but I think more importantly, government must come up with interventions that allow all sectors, and I'm not going to say private or public, both sectors. It's overstated that is the public, private sector that moves the economy. I think public also has a, so I think government should do that. What government must do is to try also fund. That basically means that we have to look at some of our taxes. I've said that some taxes shouldn't go away. I think more importantly, too many people are not paying taxes at all. And that tax issue must be resolved properly. If it's true that 30 to 40% are the ones who are paying tax, we have to find a way to make sure a lot more people are in the tax bracket. And let's see how that is done. But the tax evasion is a bit too high. So I think that should be resolved.
What do the commercial banks want? The bit about how more money could also come into the system, the cost of credit as well. And there are certain key points that government should touch to impact positively on commercial banks. What do you guys want?
Job creation. When people are created, when people are in jobs, we have quite a number of people who are not working. When people are working, they spend. When they spend, banking goes up. Banking is nice. Everybody's happy. Give the enabling areas for businesses, especially small and medium. There's a lot of talk around small. It's almost a cliche. SME. Everybody says SME, and we are SME.
We're doing little for them.
And then when we go in there, it's not that much. Because the thing is that we must have an enabling. The institutional areas, for example, if you tell people to go into farming, what is the infrastructure? What are the offtakes? You hear a lot of stories when there's a glut. People go into farming and there's a problem. I remember me and my friend went into poultry farming because it was, and even for me, it was an eye opener to see that it's not that easy at all. And it's just 2, 3, 4 factors, and then they disappear as soon as you start producing. So the enabling areas are very important, and we need to focus on agriculture and make sure agriculture because that's where it all starts from. I see quite a number of people are now involved in the Chamber of Agriculture, and I hope that some of the conversations that are going on will go into the budget. And so government should play the role of enabling and make sure that people can comfortably and confidently go into the whole.
From your personal experience, and also sitting where you sat at decks, or not even in this bank alone, in previous decks where you are the escrow and look at all these proposals. In terms of agric, is the problem really funding, or the structures are just not there to aid funding?
There's a bit of both. Funding is there, but I don't think funding is the biggest one. The biggest side is post-production. What happens? If you don't have storages, if you don't have off-takers, if you don't have... because those who find the niches that work, it works very well, right? So, yes, there's a bit of funding because we all keep talking about export, we're all talking about non-traditional and all of that. But when it comes to it, we are still doing rain-fed agriculture in this age and time. That must tell you all you need to know. We shouldn't be doing rain-fed. We must be doing year-round planting for the crops that we have a competitive advantage around and all of that. So Ghanaians, we have quite a number of problems. But like I said, you eat a cow bite by bite, and we must get around to
Some are saying that let's channel some of these funds through the banks for on-lending when it comes to even financing agriculture, when it comes to supporting the SMEs. Is that the right approach then?
It is one of the
handouts
approaches
directly by government.
It is done.
Should that be the way going forward? Everything goes through the bank, and that's the way these funds can be recovered.
We've done that a little bit where funding has come through banks, but in the end, what did it do? If banks fund it, banks cannot guarantee the end result. So I fund you, you produce, there must be off-takers. There are a whole lot of industries that are coming around. Tourism is becoming big. People are coming in. The hospitality is becoming big. What are the linkages around the hospitalities to make sure there's end-to-end? So because we have a propensity to focus on one aspect of something and forget that it's a chain. So once we have that broad outlook of it starts from here, it ends from here. Are you going to, when you grow coconut in Asamankesi, what about transportation? What about the railway lines? So all those little things that we need to do. And when it comes to Accra, what about storage? Do we have all these things? And all of that make sure there's a seamless chain of events end to end are important. We always tackle one and forget. Just like Accra traffic, we usually create a road, and then we forget that once they go beyond this, they all now quickly go and arrive at the second point. So now we have flower pots, then there's a new traffic somewhere else. We have Obechebi and then it goes somewhere else. So we must plan end to end and stop the very short-term things we need to do. Somebody must do it.
In dealing with the infrastructure gap, and finally, as we wrap up on this interview, do you think that private-public partnership is the way to go? And where, for instance, we bring in banks like yours and other banks as well, pull them together to finance the infrastructure gap? Because if government is really going to cut in this budget.
And that's why I keep saying that government has a business of doing business. I don't believe in government. The thing about private-public is that the privates are short-term. Governments can't accept to be short-term. So that if there's something that needs patient capital, 10 years, 15 years, 20 years, and you can't get a private person to come with you, you just get it done. And then make sure you get your return over a period of time. And then that affects other things, because it's not just your return. If you have a proper, we don't have a 4-lane road of Accra Kumasi, which is one of the biggest economic corridors. I mean, just fix it and do the tolling, right? Just find the money, fix it and do the tolling. And all these things then becomes enablers, opens up other industries. And as for the private people, they will go where opportunities. Forget the private people, just give the enablers, give the important things that are required. George, you made me speak more than a banker.
And this has been PM Express. Mr. Santi, I appreciate your time so much. This has been PM Express Business Edition, engaging the Managing Director of First Bank Ghana, Mr. Victor Asante, on developments in the banking industry, the expectations on the 2025 budget, and what do you need to do to get funding from these commercial banks out there? I know the debate will still go on in your homes and your offices about whether the commercial banks can do more when it comes to lending to these critical sectors of the economy. This has been PM Express Business Edition. My name has been George Wiafin.